Okey, dah ada kan? Okey, lain okey? Satu ni. Okey, yang ni. Okay, Assalamualaikum. We start again. Okay, I will explain again about a letter of credit. Okay, letter of credit basically, whenever you as a buyer, okay, let's say imagine that you as a buyer, you want to buy product from normally international companies from other countries. Okay, so um, for the seller to just send goods to you, okay, without any payment is high risk. Okay, so what the seller requires, okay, from the seller is to issue a letter of credit. Okay, letter of credit stating that, okay, they can send the goods upon confirmation of the receiving the letter of credit. So as the buyer, okay, or the applicant, they will go to the bank, okay, which is the issuing bank, and they will apply for letter of credit. So this is the letter of credit application, stating that they want to purchase, for example, goods from China, or maybe goods from the US. Okay, so the issuing bank, okay, will actually look at your application and look at your credit rating, credit score, and the risk involved, and so on. And then they will actually approve. Once they approve the letter of credit, they will issue the letter of credit to the advising bank or confirming bank. Normally, the advising bank and confirming bank are the bank of the seller. Okay. So once the what call it the advising bank, okay, or the confirming bank say that, okay, we have received the letter of credit from the issuing bank, okay, and then they say that it's confirmed, it's genuine, okay, they will actually advise the seller that they have received the letter of credit. All right, and then only the seller will ship the goods. Okay, they ship the goods to the buyer. All right, so they ship the good to the buyer. All right, so once they ship the good to the buyer, okay, the buyer will need to collect the goods, okay, at the port, okay, at the port, at custom, or at the port. So when they want to collect the goods, okay, they have to what you call it, present the bill of lading. Okay, they have to present the bill of lading. So when they present the bill of lading, only, okay, the good will be released. Okay, the bill of lading. Okay, sorry about this. All right. It's quite difficult to use the mouse. Okay. All right. Right. So, okay. Now we look at, this is a bit complicated, right? So it's okay. All right. So this is the process of issuing the letter of credit. Now the process of getting the, what I call it, the goods. Okay, before the buyer can collect the goods, they have to present the bill of lading. So how the bill of lading is being produced is basically like this. All right. Okay, you remember just now the buyer apply for the letter of credit, and then the letter of credit, okay, will be sent to the negotiating bank or the advising bank, right? So basically, they will actually what I call it, advise that the seller, okay, they have received the letter of credit, all right, and then the goods will be produced, right? But basically, before the seller, okay, want to send the goods, okay, the negotiating bank, okay, can actually, what I call it, pay the amount, okay, the advance fund, number 7. Okay, right? Okay, and then at the same time, the seller will actually negotiate the documents, example, a letter of credit, and a bill of lading. So the bill of lading will be sent to the negotiating bank. Okay, the negotiating bank will actually send, okay, the bill of lading to the issuing bank. Right. Okay, so before this, we call it, all of this document can be presented to the issuing bank. Basically, the issuing bank has to authorize funds to the reimbursing bank, Okay, then this fund will be reimbursed to the negotiating bank. Okay, so negotiating bank will claim, okay, from the reimbursing bank, right? So this, so they have won the fund first, then they claim from the reimbursing bank, and then the bank have to pay the money to the negotiating bank. All right. Then the, what we call it, the document, okay, the document will actually be endorsed here, right? Be endorsed here after the principal pay and sign the trust receipt. If they don't have money, they have to sign the trust receipt. So this is another facility from the bank. So once they're giving a credit facility, okay, for trust receipt for 90 days, okay. If they don't have the trust receipt, we call it facility, then they have to pay cash. Okay, they have to pay cash. So they have to pay cash, then the bank will issue the bill of lading. So once the buyer got the bill of lading, okay, then the goods can be collected from the port, because this bill of lading will only be released after the buyer pay or sign the trust receipt. Okay, so do you understand the process of this? Okay, just look at um, tak dengar suara. Sekejap saya nak tengok soalannya. Okay, soalannya Syazwan Naim Sarafi, maksudnya doktor, letter of credit ni depends on buyer ke sama ada dia nak apply atau tak. Biasanya saya rasa macam mana untuk buyer apply letter of credit? Okay, saya akan jawab. Okay, basically letter of credit ni selalunya buyer, okay, will apply when it's being requested by the seller. Okay, tak dengar suara ke? Dengar suara ke tak? Ada dua online ni. Process of this. Ada 8 8 online. Okey, suara ada. Okey, boleh tak? Letter of credit ni depend on buyer ke sama ada dia nak apply atau tak? Tak, it depend on seller. Seller yang minta. Okey, seller yang request letter of credit sebab they want to secure the payment. Okay. Okay. Does the Lazada and Shopee apply it? Because most transaction directly through credit card. No. Lazada and Shopee do not apply letter of credit. Okay. Normally this is for big amount of purchase. Okay. Lazada and Shopee is for consumer goods. Okay. Consumer goods. So they don't apply letter of credit. So basically you pay cash. Okay. That is open transaction. Alright, so that is but this one is actually for companies. Okay, they actually they import products from the overseas, 1 container, 2 containers, right? So basically they involved with a lot of amount of money, right? So maybe the transaction is 100,000 ringgit or 1 million ringgit. So basically the risk is high for a company to just send goods from overseas, okay, to another country that they don't know whether the buyer, okay, can pay or not. So that's why they need to have this letter of credit, whereby the letter of credit can be almost about 90% confirmed, but sometimes also there is some risk of non-payment. Okay, ada soalan lain? Any more other questions? So Lazada and Shopee does not apply because it's for consumer goods. Kita beli satu-satu kan products. Alright. Okay, let's continue on. Okay, no question about this, huh? Any questions about the letter of credit? Okay, so this bank actually facilitates, okay, the process of selling and buying between the buyer and also seller, and normally it is done internationally, but also they can be done also for domestic, right? Domestic, which is for local. But normally for local, they only use trust between the seller and buyer, so they don't need the letter of credit. Okay, but if the buyer wants to get credit, okay, facility from the bank, okay, by trust receipt and so on, so they can use actually the domestic letter of credit. Okay, all right. So the fund is actually like confirmed, okay, being confirmed by this issuing bank with the participating of the issuing bank, reimbursing bank, and also negotiating bank. All right. Okay, stage 2. Okay, this is documents against payment. Okay, now this is stage 3 basically, but I've actually explained to you just now. This is what I call it. Once, okay, the remitting bank has actually forward the document, example, the bill of lading. Okay, now this is actually in the other way around. This is the seller, this is the buyer. So the seller will forward the document, the bill of lading. Then the bill of lading will be forwarded to the collecting bank, and then only the bank will give to the buyer, so the buyer can collect the goods from the port. Okay, so the buyer has to make payment, and then the what I call it, the payment will be transmitted to the remitting bank. All right, and then the bank pay the seller. This should be uh, the other way around. Okay, it should be here. All right. Okay. Okay. Now let's look at an open account. An open account is something this is the same as like the uh, Shopee and Lazada. Okay, basically you don't need like what you call it, letter of credit. You just based on trust. Okay, based on trust that the seller will ship the goods to the buyer, and the buyer will pay the payment to the seller. For example here, okay, one is the seller will send the goods, okay, goods to the buyer, or the buyer make payment first to the seller. So there are bank here, bank the buyer bank, and then the seller bank. Then the seller will check the bank account. Okay, once it's confirmed, okay, they will send the goods. Okay, and then they will actually send the documents to the buyer, right? So for example, for Shopee and Lazada, there is no document actually being sent, but it's actually an email stating that an invoice stating that you have made the payment, right, by the seller. Okay, and basically the bank here, all right, so basically this is a buyer bank, and then this is Lazada bank, right? This is Lazada bank. Okay, and this is your bank. Okay, so your bank, for example, you use Visa or credit card. Okay, you're using your credit card, and then your credit card is actually confirmed received by this Lazada bank, and then seller will send the documents, send the goods to the buyer. So this is an open account without letter of credit, which is based on trust. Okay, one is that whether the trust of the buyer, whether the seller will send the good, and also the trust of the seller, whether the buyer will make payment. But normally for Lazada or for Shopee, you will make payment first, then only the seller will send the code. But this is under whether you trust Lazada or not, so that the goods, okay, will be what I call it, delivered to you in good condition. All right. And then we look at the short-term facilities. Okay, short-term facilities, we have the non-cash facilities, example, LC to facilitate business, and so cash facilities, example, LC to finance business, right? For example, here for sales financing, purchase of export bill, purchase financing, trust receipts, and also general financing, example, overdraft. Okay, so these are the short-term facilities that you can actually acquire from the bank, and the total amount this category should be sufficient to meet the net working capital requirement. Otherwise, the company should have other sources of cash, such as excess long-term fund to finance this portion. So basically, this is the part that you want to finance the what you call it, the company. Okay, we have this net working capital, okay, requirement. For example, just now 260,000. It can come from sales financing, purchase financing, and also general financing, overdraft. Normally the company will only take overdraft, okay, revolving overdraft, for uh, financing purposes. Now now we have several what we call it Islamic contracts that we can use. Okay, these Islamic contracts, okay, can be used in what we call it short-term financing. For example, by istisna, ijara muntahiyah bil tamlik asset financing, mudharabah project financing, musyarakah project financing, and wakalah contract. Okay, so basically these are the Islamic contracts that actually can be used in financing the working capital of a company, right? So the buy al istisna, basically the buyer, okay, and the seller is the banks. Okay, so basically they will actually if they want to buy an equipment from a manufacturer, basically for example a machine or something like that, right? So basically the seller, okay, will be the bank, not the equipment manufacturer. So once the what I call it the equipment is actually completed, okay, the bank will actually transfer the completed asset to the customer. Okay, the customer will pay, but this will be paid according to the progress of the we call it the equipment we call it manufacturing. Okay, so it is in progress, so progressive, right? Progressive. So you pay in progress. Okay, once it's completed, then you make payment. Once completed, you make payment. So it might take some time for the whole equipment can be completed. All right. Okay. For ijara mutahiyah bil tamli asset financing, so basically you have what you call it, the customer or the lessee, the IFI, the bank as a lessor. So the customer will rent. Okay, ijara is actually renting. Okay, from the lessor, right? So basically, first this is the dealer, right? The dealer. All right, so the dealer, okay, you make down payment to the dealer. Okay, you make 10% down payment. For example, if you want to buy a car, for example, then you make down payment. But the rest of the purchase price will be paid by the lessor. Okay, this will be paid by the lessor. And then the lessor, the bank, will lease the vehicle, okay, back to the customer. Okay, lease the vehicle back to the customer, and the customer will pay ijarah rental, which is monthly rental payment over agreed period. And then at the end of, for example, the tenure of the financing, for example 5 or 10 years, the customer can purchase the vehicle at the end of the lease period. So at the end of 10 years, then the lessor will sell, okay, the the vehicle to the customer. Okay, this is ijarah mutahiyah bitamlik asset. Okay, rental with purchase. Okay, at the end of the period you purchase. Okay, rental with sales and purchase. Alright. Another one is mudarabah project financing. Okay, mudarabah project financing basically we call it one, okay, will provide the capital, then the other one will provide the skills or entrepreneurship skills. Alright, so here the bank will become the capital provider. So the bank will inject money, alright, ringgit to the customer. Okay, alright, and then the bank also will okay. Alright, so the capital contribution will be paid to the customer. Okay, this is the capital, the money. Okay, this is actually, it can come in terms of, this is actually the same. Okay, the capital contribution is paid to the entrepreneur, and then the entrepreneur will actually do the business. Okay, they do the business, and then once they get profit, this is a profit, then they have to share based on agreed ratio. For example, if the ratio is 30% here and 70% for the capital provider, so this is the ratio, 70-30, or it can become 60 and 40, or 50-50, or 30-70. Okay, whatever. And then the loss, okay, in terms of this project will be borne solely by the capital provider. Okay, only the capital provider will bear the loss, because the entrepreneur has done his best, okay, to do the business, and it does not make profit. So basically only the capital provider will actually bear the loss. Now this project financing, mudarabah project financing, is very risky for the bank, because they will face capital losses if the company did not make any profit or making loss. So basically for the bank to involve in mudarabah project financing is likely very, very minimum. Okay, it's not being practiced in the banking industry. So basically not really many banks actually provide mudarabah project financing. Alright, so even though we have this mudarabah project financing, but normally they will go for murabahah, which is debt financing instead of equity financing. Okay, this is actually equity financing. Okay, alright. The other one is also risky also, which is musyarakah project financing. Okay, whereby the bank and the customer will become partners in the business. All right, in the business. So basically they will do the business together. Okay, manage the business together, and the capital contribution pooled and owned by the business. So it can become musyarakah inan or musyarakah mufawadah. Okay, remember last time, inan can be, the capital contribution can be different between the what we call it, bank and also the customer, or musyarakah mufawadah, just stating that the capital must be the same, similar. For example, 50-50. Okay, in the case is 50-50 for musyarakah al-mufawadah. But musyarakah inan, it can be 60-40, 70-30, or 90-10, and so on, because it does not require for the capital to be the same, to be similar as we call it musyarakah mufawadah. Alright, now the profit will be shared based on an agreed ratio. If it is being silent, then it will be use the what will be the capital contribution, right? So if they are contributing 50-50, then you will have the profit to be 50-50 also, right? So, but if it's already been agreed that the profit being divided 60-40, then you have to have 60-40 and so on. And the losses will be borne by both parties. Okay, for example, here the banks and also the customer. So it's a bit different as compared to mudorabah. Mudorabah, the loss will only be borne by the bank. But for musyarakah, both will be having the risk of loss. Okay, because they both manage the project, the business. Okay, the bank also manage the project, and the customer also manage the project. So basically, musyarakah project financing is also likely very, what we call it, less attractive for banks to finance, because it's high risk, and also the bank doesn't want to become a partner to manage the project, because they already have their own business, okay, which is the banking business. They don't want to go to selling, what I call it, newspaper, selling products and so on. So it's very, very less likely that they will enter into this musyarakah project financing. Okay, so unless there is a specific project that is actually might be interested, okay, might be interesting for them to venture into. But as far as I'm concerned, commercial banks, for example, they don't go into the musyarakah project financing because they don't actually have this, we call it, any business related to this, because their business is actually banking business. But if you are looking at bank pembangunan or SME bank, that probably they can actually go into this type of musyarakah project financing. And the last contract that we can actually discuss here is a wakalah contract, which is just simply stating that one would be an agent, the other one would be the principal. Okay, so who will be the agent here and who will be the principal in this contract? For example, here, this is a wakalah letter of credit. Okay, basically, you have this exporter and also the exporter bank, the advising bank. So basically, number one is this, they have to agree, okay, they have to enter into the wakalah contract. So the importer here want to buy from the exporter, right? So it's the same as letter of credit, but here, instead of just using a simple, what I call it, letter of credit, they use agent and principal. Okay, agent and principal. And the importer's bank, okay, the importer's bank or issuing bank, so the same thing, send the LC, and then the exporter's bank submit the document, and then the importer's bank make payment being given to the exporter. Once the payment, okay, is confirmed, right, then the we call it the exporter will ship the goods to the importer, right? Okay, now here, okay, these are all the, what I call it, the wakil, okay, the agent, okay, so of the importer, the agent of the importer in the wakalah contract. Okay, here the Islamic banks actually appoint customers as purchasing agent, right? So this is number one, they become the purchasing agent here. Okay. Okay. So we have finished for the lecture. I think we cannot do this, what I call it, on the next chapter. So before we end the session, I'd like to open for any questions. Okay, maksudnya doktor, letter of credit ini depends on buyer ke sama ada? Bukan, ini dah. Ini dah jawab Ini saya sudah jawab, okey, Syazwan sudah faham, okey. Tak ada je yang tadi je yang tak ada, okey. Alright, so any questions? Any questions, guys? Any questions? All right. Okay. If there is no question, then we'll end the session with the recitation of tasbih kifarah and surah wal asbad kamu washtaran tawastafika wa atubu. Bismillahirrahmanirrahim. Wal asr innal insana lafi khusr illa alladhina amanu wa 'amilus salihati wa tawasaw bil haqq wa tawasaw bis sabr.